CNBC-TV18.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Sonia Shenoy and Pavitra Pari. Good morning, girls. Another very, very quiet opening for our market. Things have been very listless, range-bound on the index level. All the action has been on individual stocks, where stocks are reacting to earnings hits as well as misses. But now that the earnings season has also come to a close, perhaps we could enter into a bit of a quiet period. There are no big major global local triggers lined up for our markets. Yesterday we had the CPI inflation number, so that's done and dusted. Earnings season has come to an end, so perhaps things could be a bit quiet. What we are seeing is a lot of outperformance coming in from the Asian markets, emerging markets. So today as well, Hang Seng is up close to about 3.5%. Taiwanese markets are up 2.5%. The Chinese markets have gained close to about 1.5%. This is despite the economic data coming in a bit subdued. Month to date, the Hang Seng is up 25%, while the Nifty is only up close to about 1.5%. So now that things are, stabilizing on the global front, there are talks about perhaps Chinese markets could reopen. You are seeing some money, some catch-up being seen in the emerging markets as well as Asia. But pretty quiet, right, in terms of stocks as well, from tomorrow more so.
From tomorrow. For today, we're at least getting the last of the big earnings coming through, right? So a lot of the likes of ONGC are in focus because of their earnings. So that one is doing well. Some of the other PSUs also holding up, the likes of NTPC. And you're seeing a lot of action in the auto space as well. These are some of the gainers in this otherwise very quiet kind of market. On the downside, it is largely tech. So some of the bigger names will be up for you, the likes of Tech Mahindra, TCS, which are in focus. And some of the mid caps will also come up. Something that we should perhaps watch is what's going on with the crude prices. There's been a big dip overnight to almost 92. So, Sonia, I guess that will be something that we can watch even in the absence of, any major trigger for our markets.
Absolutely. It's so quiet, right, today. I mean, we've had a couple of days where the market has just sort of taken a pause, a bit of a breather. We are still just inches away from the all-time high, so it's just a matter of time before we get there. But so many stocks to talk about, so we have our entire research team to pump it up for you this morning. They're all here with us. There's Sonal, Nigel, Vivek, and of course I'll tell you about some stocks as well. But what tops our charts this morning is ONGC. It's higher in trade post. It's Q2 numbers. Sonal, take it away.
Thanks a lot for that. Well, yes, strong set of numbers coming in from ONGC, and it was not just good numbers. It was a big beat versus the parameters. Of course, quarter-on-quarter numbers were lower because of lower crude prices. But look at the numbers versus the poll. Revenues at 38,320 crore rupees, which compares with a poll of 35,560 crore rupees. EBITDA at 18,811 crore rupees, which is 1,000 crore higher than the poll, which was coming in at around 17,000 crore rupees. Margins at 49%. Yes, they have declined on a quarter-on-quarter basis, but profits also 3,000 crore rupees higher than what the poll was suggesting at 12,825 crore rupees. Surprisingly, net realizations, that is crude oil realizations, they have come in higher than what the street was working with. It is a 37% YOY growth versus an expectation of just 7% YOY growth, and the number has come in at $94.96 per barrel. So good going for ONGC. Now the next thing to watch out for will be how the windfall taxes are decided every fortnight. That is the way, and also crude oil prices. Overnight they were down, but we need to watch out for the trajectory. But net oil realization strong at $95 per barrel, and that's why the stock is buzzing in trade.
Okay, thank you very much for that. NMDC is under pressure after the company's second quarter earnings missed estimate. Nigel is standing by to give us more details. Nigel?
Well, NMDC's numbers were disappointing. We already had the provisional volumes numbers, but that as well was lower than what we were working with. So we were working with a number of close to around 7.8 million tons or thereabouts. It came in at around 7.4 billion tons. So that was clearly a bit of a disappointment. And the realizations as well did come in much lower. In fact, realizations on a year-to-year basis was down by close to around 45%. On the top line, the reason for the miss is the Chhattisgarh volumes are not picking up. So that was one cause of worry. Moving to the margins, well, the problem out there was costs were higher. And the employee cost as well did spike up on a year-on-year as well as on a sequential basis, which hurt them. Keep in mind that the other income as well did pop up. So stripped of that, actually, the profit number would miss estimates by a larger proportion. Explains why the stock is lower, a top-down miss on NMDC.
All right, Nigel, thanks a lot for getting us all of the details. The stock is almost 5% lower as we speak. And another company which is suffering as much of a loss is GMR Airports. This was a seasonally weak quarter for the company. So Vivek is here to take us through the fine print. Vivek?
Well, absolutely right. So seasonally weak quarter, higher AFI is actually weighing in negatively on the performance. Also, margins have seen a significant dip on a year-on-year basis. And however, on the brighter side, while it's a loss on the bottom line, it's narrowed on a year-on-year basis. So looking at the numbers, the gross revenues, however, while they were up almost 54%, however, on the back of the fact that the company now has to share part of the revenue as far as the Delhi airport is concerned with AAI, the Airport Authorities of India, the net revenues has actually gone up just around 17.5%. Reported EBITDA was down almost 5% on a year-on-year basis. Margins at 42% versus 52% again when you're comparing it annually. The loss this time around 210 crore versus the loss last time around of close to 530 crore. So losses have gone down on a year-on-year basis or narrowed quite significantly. So going forward, what the management is saying is that they are expecting some momentum on the back of the fact that newer routes as well as capacity addition as far as airlines are concerned. That is something that they look forward to. While there has been a significant growth in passenger traffic on a year-on-year basis, still slightly below pre-COVID levels, company also continues deleveraging with a divestment of the stake as far as the Philippines airport is concerned.
Okay, well, thanks a lot for that. But IRCTC is the other stock that's under pressure. It's been a soft quarter for them. Mangalam is here with the details. Mangalam.
It has been a soft quarter indeed for IRCTC, and that's why the stock is lower in today's trading session. Depends on how you look at it. One would say that quarter on quarter it is a slow train, 5% decline in their revenues as well as the EBITDA, as a result of which an 8% decline in their profitability as well. But if you take a look at it year on year, there has been a 99% jump in their revenues. But that has meant that, despite that, the EBITDA has grown just around 44% and the net profit too has grown at similar levels. Why is that? Because the growth has been led by businesses which were only partially open the same time last year. Case in point, something like the catering business, which grew about almost 370% in terms of revenue this year. But with that, we also saw catering expenses grow from almost 228 odd crores to 280 odd crores. That's a low margin business for the company. The business that drives the margins for them, which is the internet business, the internet ticketing business, that was flat quarter on quarter, and year on year as well, the growth was just about 13%. Nothing really to write home about. The other business that did well for them was Rail Neer, which was the water business. Again, on account of a favorable base, grew by about 75%. But this too is a 7.5 to about 8% sort of margin business. So growth being led by margin draggers, whereas the margin supporter was the one which saw very limited growth, which is why the stock is lower in trade today.
Okay, thank you very much for that. Let's turn our attention now to the tyre space. Strong numbers, particularly from Apollo Tyres, Sonia.
Absolutely. There are two tyre companies I'm looking at, Balkrishna Industries and Apollo Tyres. Let me start with Apollo first because the stock is at a fresh 52-week high at the moment. And it's had a very good run today, as you pointed out. It's up almost about 4%. Now, the margins have gone up 40 basis points quarter on quarter. It's an all-round beat that Apollo Tyres has seen this time around. There's a sequential margin recovery in the European business as well. And that, I think, is something that the street will take with both hands, given the challenges that are there in the European market. There's an EBITDA growth in the standalone business in India. Now, that's important because its peers like MRF and CEAT saw an EBITDA decline. So, Apollo Tyres is standing tall amongst its peers, and the top line growth has also been very healthy for Apollo, over 17% growth. The only niggling worry for Apollo Tyres is the rising debt. So the debt in Q2 rose to 5,470 crores. This compares to 5,100 crores. So that's the only worry. Balkrishna Industries, very interesting there. The company has suspended its annual guidance due to the challenging macro situation. They say that they're unable to guide for annual sales volumes, and they also talk about how in Europe the situation is challenging and that may have an effect on their performance. There's also a downward revision in capex. They will achieve now a capacity which is reduced to 335,000 million tons per annum. And even the margins are under pressure. EBITDA is down 21%. Margins have fallen to 16%. So two stocks at the opposite ends of the spectrum. But Balkrishna has recovered from the lows, now trending in the green.
All right, Sonia, thanks a lot for that. That is a roundup of some of the stocks that we're watching after their Q2 earnings. But with that, it's time for our first short break on this show. When we come back, we'll shift focus to the world of commodities and tell you what's going on there. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. It is a quiet day of trade for our own markets, but there's lots going on in the world of commodities. So let's talk about that. Manisha joins us. Manisha, we've been talking about the crude move all morning, but there's so much going on with the metals as well.
Oh, well, yes, especially with the dollar index trading below 107. There's a lot of support that you have seen come in for metals. Also, the fact that you have seen tight inventories. The fundamentals, in any case, have been on the stronger side. So a lot of traders, investors are now getting out of short positions, even building long positions, and that has been supportive. And then largely the market sentiment is now about a 50 basis point rate hike from the US Fed in the month of December, and that seems to be soothing a lot of nerves there. So take a look at the nickel prices. We are trading at a 5-month highs onto this one. Prices rebounded 15% overnight, and that is because there is a limit or a cap at 15% up or down on LME, and this has been since the month of March, when, remember, you had the nickel prices gaining up by nearly 45 to 50% during one day. That cap has been since then there. Not just nickel, aluminum prices are trading at a 3-month highs. There has been a statement from Alcoa warning of pressures on margins due to high energy and high raw material costs as well. So lower production in case of aluminum from Europe has been a supportive factor there. Also, you have copper trading at a 5-month highs. We've seen prices gain up by 12% in the month of November alone. Good going in steel as well, 7-week highs onto that one. Prices, though, still are 30% lower from its 2022 highs, but they are higher by nearly 12% from the current year's lows as well. Gold is trading at a 3-month highs too. We've seen a low of $16.15 per ounce, and we are trading at around $17.70 per ounce right now. October has seen a gain of around $120 for the gold prices there. Silver also trading as a 5-month highs at $22 per ounce. Here as well, we have seen a low of almost around $17 in the last month itself. It has been good going for across metals, precious and base.
Okay, Manisha, thanks a lot for that. Let's slip into a quick break, but there is a new debutant on the Lal Street, Fusion Microfinance. It's a muted debut on the bourses. We'll be joined by the management to discuss. Well, Fusion Microfinance made its debut today. It was a muted debut on the Lal Street. The stock listed at 358 rupees, which is a slight discount to the issue price. To discuss this and a lot more, we're joined by Devesh Sachdev, who's the MD and CEO of Fusion Microfinance. They provide microfinance and MSME loans, machinery loans, small business loans, etc. So in that sense, they cater to a lot of perhaps rural tier 2, tier 3 markets as well. Devesh, thanks a lot for joining in. I want to... Okay, we'll go to the management in a bit. I think there's some issue with the audio. But for now, the stock is taking a big knock. It's down almost about 7% odd. So definitely having a bit of an issue there. Remember, the return ratios for the company, for the MFI, have been very weak until Q1 of last year. And that, I think, is something that has concerned the street. It's also an expensive issue compared to its peers. So perhaps that's something that the street has not liked as well. The credit rating has been on the lower side. So, that's something that the street has not liked. But it does have a huge penetration, and it has a well-diversified presence. So we'll try and touch base with the management in just a bit. For now, the market is very quiet. Okay, I think we have him with us. Devesh, is my voice reaching you?
Yes.
Okay,
yes,
great.
This
is Sonia here. I just want to talk a little bit about the concentration risk. You're concentrated in states like Bihar and Uttar Pradesh, and you do cater to a lot of the small business owners, microfinance, MSMEs. Would you want to sort of lower your concentration risk, and what is the way forward, say over the next 1 to 2 years in terms of either geographical spread or diversification?
Yeah, I think, Sonia, thank you for having me here on your channel. So, I think one of the big differentiation which we bring on the table is our diversification. We are in 19 states, not a single state where our portfolio is more than 20%, not a single district where our portfolio is more than 3%. So we are India's, I think, one of the very few organically diversified companies, Sonia. And if you also look at our ticket sizes, our average outstanding, we have 3 million clients. It's around 25,000. Our disbursement size is around 35, 36, which is comparable or lower in the sector. We are, I think, we have the largest customer base. We have 3 million clients. Last year, we added 600,000 new customers. So I think this one big, key strategic competitive advantage we bring on the table is the fact that we are very diversified. We are well established in some of the northern states. You talked about UP, Bihar. We have a long history. and we are very well established in some of these geographies. And we have been very, very careful about building the portfolio and managing the concentration risk.
Morning, and thanks so much for joining in. Given where you operate in, are you at risk when in the election manifesto for various states they offer any kind of farm loans, waivers? When that plays out, because very often we see that across states, is that a big risk? Do we see historically that your performance, your NPAs get impacted?
So, look, the overall, understanding of the sector has really gone up. It has happened because as a sector, we have an association, MFIN. We have really done a lot of work in really, telling the state administration, policymakers, and especially at the ground level, the differentiation between microfinance. We were earlier, treated as a chit fund company. So I think that differentiation has now been created. The understanding about the microfinance sector is very well established. And this risk has drastically, gone down. We have seen elections in the last few years. All the major states have went through elections. We did not see any kind of such, announcements or their impact on the clients. Clients understand. They have a record in credit bureau. They want to pay. They want to keep their records clean. And overall, if you see the policymakers, the government, the current regime, they have a huge focus on financial inclusion. So this risk has drastically gone down over the years because of combination of all these factors.
All right, that point is taken. Hi, Mr. Sachdev. This is Pavitra. Thanks for joining us. Like we were pointing out a short while ago, your return ratios up until Q1, that is right before your listing, were looking quite weak. Now we've seen a sharp improvement. Do you think that this is something that you can sustain at these levels? And also, after this fund infusion that you did see through your IPO, do you expect the ROE to trend lower?
So if you look at our 12-year history, so you factor into two important points here. One, we have been growing consistently. We have been adding branches. We added 400 branches last 3 years. Look at the portfolio growth from 3,600 crore in March 2020 when COVID started to now close to 7,400 crore as of June. There was an impact. We all know, pandemic has impacted. But if you take out some of these outliers, I think we have been given good returns on both ROA and ROE. All the pains of the COVID are behind us. We have front-loaded all the provisioning. We were building, a lot of investments have happened. 400 branches have come up last 3 years. All the levers are in place. That's why if you see that I also want to share with you that yesterday CRISIL has upgraded us. Our rating has been improved from A- stable to A stable. So I think we have all the right levers to give a very consistent returns to all our shareholders.
Okay, all right. All the best. Thanks for joining in. The stock, though, continues to be under quite a bit of pressure, but the management promises that consistent returns to shareholders is their priority. We'll slip into a short break. When we return, we'll be joined by the LIC chairman, M.R. Kumar, to discuss the company's second quarter earnings and much more.
Welcome back. Industry leader Life Insurance Corporation of India, LIC, reported its Q2 earnings, on Friday. The premium APE, VNB growth were very strong, but the embedded value of the insurer has remained flat for the last 2 years. Mr. Kumar, chairperson of LIC India, is now with us on the show. Thank you very much, sir, for joining in. My colleague Yash is also here. Just want to get a question in. Even though you've reported a strong growth in your value of business growth, your embedded value growth has remained flat. Could you share your outlook on that front?
Yes, thank you for this opportunity. I know the embedded value has been very slow in moving up, but then please remember that when we did this for the first time, we had modeled only 90% of the products, and as of now, we have modeled all the products, and things are settling down. I think it is achieving some kind of consistency now, and going forward, I think it will grow. I can't give a future value to it because we'll have to wait and see what happens, but we're very confident that we'll be able to change things there.
Chairperson, sir, this is Yash here. I want to ask you one important part. You had an other income of about 6,800 crore and most of it was through tax refunds of previous years. What I want to understand is what is the amount which is still under litigation as far as tax side is concerned for LIC? And do you expect more to come from that end in the current financial year?
I don't exactly have the figures with me right now, but I think the refunds that we got were quite old. Quite some time after which we've got these refunds. There's nothing much left, but a little bit is still there, and we are following up and we're writing to the department to see whether they can refund it. I am sorry, I don't have the figures right.
Okay. One more question as far as your non-par business is concerned. You had mentioned that in the current financial year, you'll cross that 10% share mark as far as the total individual APE is concerned. You are at about 9%. Are you certain that in the next 2 quarters that will cross 10%? And once that does, what will be the next target as far as non-par business is concerned?
Okay, so I mean, if I forget AP for a moment and just look at the share within ourselves, the total business, the non-par in policies is 5% and premium is 31.77%. In terms of total premium, and market share in non-par policies and premium are 13.38 and 21.43%. We have seen quite a good uptake in non-par. We have been, in fact, post-IPO, we have come out with only non-par products. It is gaining momentum, and I'm waiting to see, to ensure that it gets, driven faster. I can't put a figure to what we'll be wanting to reach, but at least the kind of change that we've had in this Q2, a similar or better change is what we are looking at in Q3.
Okay, similar or better change in from Q2. Mr. Kumar, we are talking about the here and the now, but I just wanted to look far out a little bit about the next 1 to 2 years. There is this possibility of the Bima Sugam, coming out as well. Regulators are talking about it. It could be a UPI moment for the insurance industry, this one-stop shop policy. Can you tell us how will it change the dynamics of the industry, and for your own business, what could the impact be?
Actually, Bima Sugam initiative is a very good one by the regulator. It proposes to facilitate the digital delivery of services in a very consistent and time-bound manner. So what we have done already is that we have some integration with the banks, new age fintechs, and online payment application. Bima Sugam, I think, will further enhance our digital services delivery. So whatever we've been trying to do in the digital space will only get encouraged and enhanced by this move by the regulator. And we'll have to wait and see how it really pans out. But then I think it's very exciting times.
Chairperson, sir, just a follow-up. You said that it will help your digital side of business, Bima Sugam, but that's a very small portion. Almost all of your business comes through the agency network, which you have the strongest in the industry, highest productivity, and Bima Sugam, from the industry feedback which we have, the commission could be 1/4 of what agents charge. That is detrimental to the largest, business acquirer for your company. What is the feedback that you're receiving from agents, and could that section of business have a negative impact as far as Bima Sugam is concerned?
Well, I would put it this way. Agents have been given the bulk of the business all this while, but then where customers want, the Bima Sugam kind of a platform where they want to choose what kind of insurance they want to buy, we will have to be ensuring that we are there in that space as well for the sake of the customer. In terms of commission rate and other things, yes, it will be reduced, no doubt. But then I'm sure the agents will ramp up their businesses in their own way. We still have a lot of work to do in terms of penetration. There's a lot of work to be done in the country. I don't see any challenge for the agents as of now.
Okay, got that. Mr. Kumar, thanks for joining us. This is Pavitra. I just wanted to ask you on your VNB margins, if you can tell us where you see that headed, by the end of the year, for instance. It is currently at around 15.2%. And on the embedded value, you said, yes, it's been slow, but you do expect it to pick up. So what is the rate at which you could see that picking up?
Very difficult to put a number to this. VNB margins, as you know, we started off from ground zero. It started 9.3, went up to 15 point something and 15.2, and then now to a slightly down. But then I think going forward, it should have a momentum of growth. I don't know in what percentage terms it will happen. EV, as I already said, is going up slowly but surely, and I think that will also pick up pace soon.
Okay. Tell us a little bit about the plans with IDBI Bank and the stake there. LIC holds about a little less than 50% stake. In terms of divestment, how much are you looking to divest? What kind of a timeline are we looking at?
Government, I think, has already come out with the expression of interest for this. And in terms of that, I think it's clearly defined what kind of a stake we would be wanting to divest. We are, as I've said before, very keen on continuing a partnership with IDBI Bank, who is the #1 bank assurance partner for us as of now. They have done very good work in the bank assurance space. We would like to ensure that we have just enough stake to carry on that momentum. But again, it will depend on the regulatory space, both the banking and the insurance regulatory space, how much we will be able to hold in the future.
Okay, Chairperson, sir, I just want to follow up to that question. Once the divestment happens, how much stake in IDBI Bank would you be left with? Second thing, what is the timeline and by when do you see that funds coming into the company? And with this divestment, would bancassurance of IDBI Bank still remain with LIC or would that also go away?
First of all, I mean, on the equity stake that we will hold, it's very difficult to say because as things pan out and things work out, we'll have to wait and see. But bancassurance, yes, once the stake is reduced, I'm sure IDBI Bank has every opportunity to tie up with other insurance companies as well. But then the kind of momentum that we already have generated in the last 3-4 years, it is there to stay, I believe. We have good connect with the ground people at IDBI. The IDBI Bank is a good connect with bancassurance officials at the ground level. Things are working out well in that space. I see that growing very fast in the days to come.
Okay, one question, sir. As far as your profits are concerned, that came largely because of the transfer of surplus from the non-par segment into the shareholder segment. Something which all investors of the company do want to know from you, why did you not choose to distribute those profits to your investors in the form of dividend, in the form of bonus? And if not in this quarter, for the financial year, is there a plan which is being considered on a dividend or a bonus?
As of now, there are no plans. We will have to discuss it, in depth, deeply, internally, and with the board. And going forward, we'll have to see how we are able to grow our business in the next 2 quarters, and also what kind of embedded value increase, like you asked, the PNB margin changes that will happen to ensure that we are doing consistent work, we are growing consistently. After which, we'll take a call on that.
One final question before I conclude this, sir. You had plans to start your own repository, insurance repository for dematerialization. The regulator is looking at a timeline for starting this, which is early next year. You have very little time if you want to start this repository. Where are those plans? Have you asked the regulator permission in terms of starting this insurance repository?
Actually, what we are doing right now is we are in talks with the other available repositories, CDSL, NSDL, and others. And we are still, planning to see how it will be the best way forward. Because we have done work in the past. We had internal mechanism way back in 2007, 8, and 12, 13. But then we are still evaluating what will be the best way to go about it. We understand that customer will be interested in having this. Most customers will, but where we have the tier 3, tier 4 cities where we do more business, I don't know if that kind of interest will be there. So we are still, plan is work in progress. Beyond that, I will not be able to say anything.
All right, Mr. Kumar, we're going to leave it on that note. Thank you very much for joining us and taking us through your outlook for the business going forward. That is the management of LIC saying that the embedded value will pick up. It has been slow, but it is going to pick up in the days to come. For IDBI, they are saying that we will have to wait a little bit longer to get the finer details. But on the Bima Sugam, they are saying that that is going to be a positive for the company. With that, it's time for a short break on the show. When we return, Dredging Corporation delivered an operationally strong second quarter. We will be joined by the management of the company to discuss the earnings and their outlook. back. You're still tuned into Trading Hour. We have some more corporates lined up for you. Dredging Corp is the one which is in focus now. The company posted an operationally strong quarter. So the standalone revenue this quarter has gone up nearly 60% and the margin has also expanded. It's currently at around 26%. K. Rama Mohana Rao, who's chairman of Dredging Corporation of India, joins us on the show now to discuss the earnings and the outlook going forward. Mr. Rao, good morning and thank you for joining us. This is Pavitra. First off, I want to begin by asking you what the current order book stands at, if you could take us through that figure, and what part of this could we see getting executed in the second half?
Yes, good morning, Pavitra. Our order book for this year, 21-22, is around 1,000 crore. And for 23-24, we are expecting around 1,100 crore. And we could do for the last, I think, 10 years, the second quarter, we achieved around 28 crores of profit because of most of our dredgers were operational at full capacity and timely completion of the projects. And mostly in dredging, the dry docking thing, when we put a vessel for dry docking, if you get within the time limit, we can save time and earn more revenue. So we could manage our dry docking also well. So all these more number of days we could get and we could earn more revenue and a lot of confidence in the workforce also. That all contributed for a good Q2. And we hope in future also we'll be doing very well.
Okay. Mr. Rao, good morning. We'll talk a little more about the business, but I just wanted to get this out of the way. In the month of July, your CEO, Mr. Victor, was suspended and there were some proceedings against him as well, the disciplinary proceedings. Just wanted a clarification. What is the status? Are you expecting any fraud at all? And will there be any financial impact because of this on the business?
No, there is no financial impact as such. There is no fraud as such. It was only because at the time of his recruitment, some kind of, say, his about qualifications and his experience, they were supposed to be properly screened. I think some kind of over took place. So because of that, some complaints came and we got it inquiry done. Prima facie, it's been found there is some lacuna in his particular qualifications and experience. So now it is under inquiry. I think within a month's time we may get, but it has, as you've seen, for the last 3-4 months time, even the stock price also has gone up by around 40%. It means it has a positive impact only, and we are doing very well.
So there has been no evidence or allegation of irregularities associated with the prior CEO, right?
Yeah.
Okay. It was
there are no irregularities as a financial irregularities as such.
Okay.
It is only as far as his recruitment process is concerned.
Got it.
There are a little bit of some kind of discrepancies about his experience and about the company he worked. And he was supposed to work in a company where 500 crore turnover and it should have been listed in a stock exchange. And there were some complaints and now it is under investigation, inquiry.
Okay, so perhaps just some lapses in the recruitment process that the company followed. Could you give us an indication of what the current order book is? What's the number on that and the order pipeline?
Yeah. See, mainly for the Dredging Corporation, it has the major ports. The major ports, we have 12 major ports. Generally, we get on nomination basis. If you work properly and if you work efficiently, we get all the works on nomination basis. So we have order book position of near about, for this year, near about 1,020 crore we have. And for next year, we have 1,100 crore. And also we are getting diversified, like in ports. In addition to the ports, we have inland waterways. Inland waterways also planning to give us work of 1,000 crore for the next 3 to 4 years time. So whatever for inland water, we need small dredges. That also either we may acquire or we may take on hire. So we are going for inland waterways, and other areas are reservoirs and dams, especially in Kerala, Rajasthan and Maharashtra. There are inquiries from the governments regarding dredging of reservoirs and dams. So we might diversify into reservoir dams and inland waterway is an assured business for us for the next 3 to 4 years, 1,000 crore. So by 2030, we are planning to go for near about 1,700 to 2,000 crore revenues. And we are going to acquire a new dredger with 12,000 cubic meter capacity at a cost of 800 crore because DCI is promoted by 4 major ports, Visakhapatnam, JNPT, Kandla and Paradip. So these 4 ports contributed near about 230 crore and 150 crores Cochin shipyard debentures and 49 million we have paid near about 80 crore because ISC is constructing this particular supplying the particular parts for this and CSL is constructing this particular dredger. So future seems to be quite bright.
All right, sir. Thank you very much for that. We're going to leave it on that note. So inland waterways will also make up a large chunk of your revenues, like you said, going forward for at least the next 3 to 4 years. It's time for a short break on the show. But as we slip into that, let's get you some exclusive opinion from BSE member and market veteran Ramesh Damani on why value buying goes a long way and why he is extremely bullish on the PSU players. Listen in.
I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupi ki cheez athane mein kharidni chahiye. And that's the same true in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make.
If I want to ask you about Nifty from here, 20,000 first or 16,000 first, what would be your answer?
The higher one.
The higher one? Oh,
yes.
wow.
Okay, that's bullish, Ramesh Damani.
Absolutely.
Technology stocks or PSU stocks, what do you prefer?
Actually, like both the groups, but right now I'm more invested in PSU stocks.
What about gold or real estate, the asset class that you prefer, apart from equities, of course?
Probably real estate. Gold is, Sonia, inflation last year was a 40 years high, 8%. Gold was down 10%.
Yeah.
I mean, that tells you something that people have moved on from gold.
Welcome back to Trading Hour on CNBC-TV18. Well, the Indian economy has seen a V-shaped recovery. That's the word coming in from Home Minister Amit Shah. Speaking to Network 18 Editor-in-Chief Rahul Joshi, he also said that the government has a roadmap to tackle the inflation situation. Listen in.
जहाँ तक महंगाई का सवाल है, पहले कोरोना के कारण और बाद में रशिया और यूक्रेन के युद्ध के कारण पूरे विश्व की सप्लाई चेन में बिखराव है और एक वैश्विक समस्या है जिसका असर कम मात्रा में भारत पर भी पड़ा है। मगर मैं देश की जनता को, गुजरात की जनता को सुनिश्चित करना चाहता हूं कि टेम्पररी फेज है। नरेंद्र मोदी सरकार ने बहुत अच्छे तरीके से इसकी रणनीति भी बनाई है और दुनिया में कोरोना के बाद मंदी से सबसे तेजी से उभरने वाले देशों में से एक देश भारत है। हमारी अर्थव्यवस्था वी शेप में रिकवर करी है और अब इस पर भी काफी अच्छा असर पड़ेगा। शायद रशिया यूक्रेन युद्ध न होता तो अब तक तो हम बाहर भी आ गए होंगे।
Okay, that's a very bullish Amit Shah on the Indian economy. For the market, it's very quiet, but it's like one of those sayings that you need to have a bit of more patience to reap the rewards. So it's that kind of a feeling in the market. We're just a smidge away from all-time highs, but the market is choosing to consolidate a little bit. Let's see how things go. It's actually split right down the middle in terms of the advanced decline ratio as well. But there are plenty of stocks that are looking good. Titan, ICICI Bank, Divi's, Bajaj Auto, Britannia are all trending in the green. So not a bad outcome, but largely the market is very, very quiet. With that, it's a wrap on Trading Hour. Stay tuned. Halftime report is up next.